You work hard for your money. You save what you can. You keep it in a checking account at a big bank because that's what you're supposed to do, right? Yet after years of saving, your money hasn't grown at all. With inflation, you're actually losing wealth. Here's what nobody tells you. While your money sits there doing nothing for you, it's doing everything for your bank. They're using it to make billions, while you get almost nothing. There's a hidden money system built into how banks operate, and once you understand it, you'll realize you've been on the wrong side this whole time. But you can flip that around starting today. Most people think keeping money in a traditional bank account is the safe, responsible choice. And it is safe, but safety doesn't mean smart. We've been conditioned to believe having a checking or savings account at a major bank is just what adults do. You get your paycheck, it goes in, and that's where it lives until you spend it. The problem is you're letting someone else profit from your savings while you get essentially nothing. Let me give you a real example. Sarah earns $55,000 a year and has built up $10,000 in her savings account at a big national bank. She feels responsible, like she's doing the right thing. But here's what's happening. Her bank pays her 0.01% interest on that $10,000. After 1 year, she earns exactly $1. Meanwhile, that bank takes her $10,000, lends it out at 12% interest for a personal loan, and earns $1,200 off her money. Sarah gets $1, the bank gets over 1,000. And this happens to millions of people every single day. This isn't a conspiracy, it's just how the system is designed. But once you understand how banks profit from your deposits, you'll see you've been giving away the opportunity to earn real returns. And there's a completely legal, safe way to earn 40 to 50 times more interest. Let's break down how this hidden money system works. I'm not a financial advisor, this is purely educational. When you deposit money, you probably think it's just sitting there waiting, but it's not. The moment you deposit it, the bank uses it to make more money. They lend it out as mortgages, car loans, personal loans, credit cards, and business loans. This is fractional reserve banking. Here's the key. Banks make money on the interest rate spread. That's the difference between what they pay you and what they charge borrowers. In February 2026, checking accounts pay 0.07%. Traditional savings pay 0.39%, and at big banks like Chase, you earn as little as 0.01%. But when banks lend that money out, they charge 6% on mortgages, 12% on personal loans, and 21% or more on credit cards. That spread is pure profit. The net interest margin for most banks is around 3.7%. Real numbers. If you have $10,000 in a checking account earning 0.07%, you make $7 yearly. In a big bank savings at 0.01%, you make $1. But in a high-yield savings account offering 4 to 5% APY as of February 5th, 2026, you'd earn $400 to $500 yearly. Same money, same FDIC insurance, but instead of $1, you're making $400 to $500. That's a 40,000% increase. Why can high-yield savings offer 4 to 5%? They're online banks without massive overhead costs of physical branches and thousands of employees. They pass savings to you. Big banks don't need to compete because most people never shop around. We use the bank we've always used or our parents used. Because we don't move our money, they have no incentive to pay more. Here's the psychology. Why don't more people switch? It's inertia, fear, and lack of awareness. We think switching is complicated. We worry about linking accounts or setting up direct deposit. And honestly, most don't realize how much we're leaving on the table. There's also this belief that bigger banks are safer, even though high-yield savings at FDIC-insured institutions are just as safe as Chase or Bank of America. The system relies on us not knowing better. What does it look like to flip this system in your favor? It starts with changing how you think about where your money lives. You're not just storing it, you're choosing who gets to profit, you or the bank. Every dollar in a low interest account could be working harder for you. And when you multiply that across years, the difference compounds in a way that changes your financial position. Let's say you keep $15,000 in an emergency fund. If that's in a checking account earning 0.07%, you make about $10 a year. But if you move it to a high yield savings earning 5%, you're making $750 a year. That's $750 of passive income for one decision. Over 5 years, you've earned over $3,750 in interest you would have left on the table. That's a vacation, a down payment on a car, or seed money to start investing in index funds. The psychological shift is understanding you're not giving up safety or convenience. You're refusing to let someone else profit off your discipline. You worked for that money. You saved it. So why should a bank earn 3 to 4% margins on your savings while paying you almost nothing? Once you see it that way, moving your money stops feeling like a hassle and starts feeling like taking control. And here's the bigger picture. This isn't just about earning more interest, it's about recognizing hidden money systems everywhere and positioning yourself on the winning side. When you understand these systems, you realize there are dozens of areas where you can make smarter decisions, using credit cards for rewards instead of paying interest, maxing out employer 401k matches, taking advantage of tax advantaged accounts like Roth IRAs and HSAs. All of these benefit those who understand them and cost those who don't. Here's what you actually do. These are specific, actionable steps you can take this week. First, open a high-yield savings account at an FDIC-insured online bank. As of February 5th, 2026, you can find accounts offering 4 to 5% APY. Some offer 5% on balances up to certain limits and around 4 to 4.6% on larger balances. You don't need to close your existing checking account. Just open the high yield savings and transfer your emergency fund and other cash into that account. It takes about 10 minutes online, and you can link it to your checking account so transfers are easy. Second, automate your savings into that high yield account. Set up direct deposit or automatic transfer so every time you get paid, a portion goes straight into your high yield savings before you can spend it. This way, you're earning more interest and building the habit of paying yourself first, which is foundational to wealth building. Third, reassess where all your cash is sitting. If you've got money in a checking account beyond what you need for monthly expenses, move the excess into your high yield savings. If you're keeping a large balance just in case, make sure it's working for you at 4 to 5% instead of sitting idle at 0.01%. The goal isn't more risk, it's getting paid fairly for the risk you're already taking. One common barrier is access. People think if it's in an online savings account, they won't be able to get to it quickly. But most high yield savings accounts let you transfer money back within one business day, and many offer ATM access or debit cards. You're not locking your money away, you're just putting it somewhere that pays you for holding it. Here's what this all comes down to. The financial system is full of hidden mechanisms that quietly move money from people who don't understand them to people and institutions who do. The bank interest rate spread is the clearest example. But once you see how it works, you can't unsee it, and that awareness turns into action. You don't need to be angry at banks. They're businesses operating within the rules, but you don't need to be on the losing end. Moving your savings to a high yield account won't make you rich overnight, but it's one of those small, consistent decisions that compounds over time. And when you stack those decisions, earning 4 to 5% on your cash, maxing out tax advantaged accounts, automating your investments, that's when you build real wealth. This is a long-term game. It's not about getting rich quick. It's about understanding the systems around you and positioning yourself to benefit from them instead of being quietly drained. You worked hard for your money. Make sure your money works hard for you. If this helped you see something differently, consider subscribing. I break down the psychology and mechanics of money every week so you can build wealth without the hype or the hustle. Thanks for watching.